So in 2024, altcoins have unfortunately taken a pretty severe beating so far. And this isn't new information. You don't need me to tell you this. If you're watching this video, you've probably felt it firsthand. You've seen your balance go down just about every time you open your wallet. And then also, just like I talked about in a recent video, most of us, myself included, by the way, don't have a lot of disposable dry powder right now to be able to scoop up the prices on the dip. So all of that is true. And I'm not going to take away from the fact that it's been a very lackluster year for altcoin pretty much ever since Bitcoin's halving. But that being said, there are actually a lot of reasons to suggest that we're in that darkness before the dawn kind of moment. And there's actually many reasons in terms of analytics, in terms of very key metrics to suggest that altcoins are about to make a very, very significant resurgence. We're going to get specific, and I'll highlight 6 reasons in particular as to why alts are set to have a very, very strong end to 2024. Welcome to the channel. My name is Maddie and this is Altcoin Buzz. All the best of luck if you choose to invest. I genuinely wish you very, very well. But I'm not a financial or investment advisor. So just remember that this video is not official financial or investment advice. One of the first reasons here that I want to point to is pretty self-explanatory, and that's the fact that Germany has sold all the Bitcoin that they've intended to. That's according to Arkham Intelligence. And actually, an interesting aside here is that the coin was confiscated not by the German national government, but by one of the state governments. The difference is that their laws in place for operating a state or province meant they had to sell their coins. They had no choice, in fact. And of course, they have sold almost $3 billion worth, but billions more are coming in on the buy side. Bitcoin ETFs, of course, keep buying. In fact, net inflows just to ETFs in July are almost $3 billion based on more than 40,000 BTC going to the ETFs so far this month. And that's a prime factor as to why this massive sale from Germany didn't tank the market. Okay, so we started macro there. We looked at Bitcoin. We're going to start focusing in a little bit more narrowly here. And the second reason to be bullish on altcoins in 2024 is the fact that the global liquidity index is rising. And look, in crypto, liquidity is the name of the game, because if people have more money, or more money is, let's say, floating around in the system, then it needs to go where it can earn the best risk-adjusted returns. This is actually a very simple idea, right? More money floating around, and then a share of it makes its way to Bitcoin, and then other crypto as well. It cascades all the way down through Ethereum, the large caps, the mid caps, and the small caps. Look at this chart here. You will not be surprised to see that when liquidity is growing, that's exactly when crypto prices are in a bull market. It's very correlated. And right now, liquidity is on the rise. More money in the system correlates with growing prices. The only difference here in this market is that there's so many projects right now. So even without all the meme coin projects, the rising tide of more liquidity is not going to raise all the boats out there, because there are too many here that we can see from the shore. Only the best and the highest potential projects are going to get that lift from new liquidity, are going to get that boost. So you're going to have to be selective. Reason number 3 here to be bullish on altcoins is the FTX and Mt. Gox repayments. These payments to creditors are starting, and in this case, the creditors are the investors on these exchanges that lost money. However, the situations are very different. FTX, for example, is paying out $16 billion to its creditors from the fraudulent exchange. The big difference here is both the amount and that most of the creditors have had their money locked for 2 or 3 years in all the suits and all that. And of course, that's a lot less time than the Mt. Gox people who have been waiting for almost 10 years now. On the FTX side, many are projecting a lot of this money is going to come into the market. That would lead to some selling, but probably more buying. We tend to agree with that opinion and that analysis. On the Mt. Gox side, it's $9 billion, which is still a huge amount, but over a much longer period of time. We would be surprised to see more than a 20, maybe 30% of this number selling. They've been in since 2014, right? They're long-term holders by default. Many are going to continue to hold. Some will sell just to get their funds back, but others may have made so much in those 10 years of holding that they may choose to sell now in order to retire, for example. Because think about it. In 2014, BTC prices were at about, or even maybe less than $1,000. So these folks are looking at about a 70x return. And look, some of them for sure are going to choose to cash in and retire from this payout. Not to mention, most of the Mt. Gox money has been paid out already. And at this time, at the time of this recording, it's almost 70% of the total $9 billion. This Altcoin Buzz Spotlight video is brought to you by CTRL, which is one of the best crypto wallets in the game. It just went through a rebrand. It used to be known as XDeFi. CTRL, of course, implies control of your own finances through self-custody. XDeFi already was one of the best wallets in crypto, especially for beginners, by the way, with great benefits like support for more chains than any other wallet. That includes Solana, Bitcoin, Cosmos, IBC, and EVM chains, one-click transfers between chains, and amazing NFT support showing all your NFTs instead of only showing what you have on each chain. And now they have a new gas tank feature that lets you pay gas from any chain in USDC or the native XDeFi token. Check out why more than 230,000 people think this is one of the best wallets in crypto on the market today. You can also sign up for the CTRL mobile beta wallet by clicking the link in the description below. Okay, the number 4 reason that suggests that altcoins are about to go supermassive here in 2024 is ETH ETFs. Because, of course, the Ethereum ETFs have launched already, and they've had a pretty smashing start. Now, for reasons beyond the scope of this video, we are less certain that an ETH ETF will have the same number go up theme and really end result as the Bitcoin ETFs in the United States. But there's no doubt that more investors and more money will come into crypto when there is an ETF alternative to Bitcoin. The common bull argument, after all, is that these ETFs, the ETH ETFs that is, are going to increase the professional, institutional nature and attractiveness of the industry. It kind of lends credibility to this space. And that's true. That's how we see it, right? Because the ETH ETFs will settle for cash. A new ETF investor will not be able to take their ETH and move it to MetaMask, Trust Wallet, or Rabby. They're going to have to sell their ETF shares, take the cash, and buy ETH and create a non-custodial wallet to hold it. So that's less bullish. Most people are not going to do this, but some will, and anything that increases crypto adoption is a good thing. It allows people that want to have arm's length exposure to crypto to get it. All right, reason number 5 why altcoins are about to have a serious comeback is the upcoming US presidential election. That's coming up pretty quickly, actually. That's going to be in November. And it looks like it's going to play out so far as your favorite soap opera, maybe a telenovela. Unless you've been living under a rock, you know by now that President Joe Biden has just dropped out of a second term. He's going to finish this term, presumably, but not seek re-election. He has endorsed his running mate and current Vice President Kamala Harris. But we could still see an open convention, potentially, a DNC open convention in August. That would mean that the Democratic Party debates and votes on the floor of the convention for who the nominee will be. Right now, Kamala Harris, it appears to be in the lead, but things could happen. There's been a lot of craziness in these last few weeks, politically, of course, in the U.S. Now, people see the presidential election as bullish for the following reasons. Trump is courting the crypto voters, and even speaking at the Bitcoin conference in Nashville, which is coming up soon, Trump could win, at least according to the polls, right? And that definitely means Gary Gensler of the SEC, the Security and Exchange Commission, gets kicked out as chair. He's been one of really the 2, I would say, most anti-crypto people in the United States government. The other anti-crypto personality, and the one who's been running Biden's crypto policy, has been Senator Elizabeth Warren. And it doesn't look like she's going to be continuing this policy in the next term. And then we actually have the Winklevoss twins, who are always up to trouble in one form or another. They've donated money, in BTC of course, to Warren's opponent, hoping that Elizabeth Warren will lose, which would be a plus, at least in terms of our industry, of the crypto space. Kamala Harris or some other Democratic Party nominee could win. Trump is not necessarily everybody's favorite candidate. You guys know that, whatever your political alignments may be. So things could go either way right now. But we kind of benefit across both circumstances because either way, it's looking like the outcome is going to be better for crypto than it has been these last few years. The 6th and final reason that suggests altcoins are about to have a superb end to 2024 is the variable of interest rates, and more specifically, interest rates cuts in the United States. This plays, by the way, into our second reason very much, which we talked about, global liquidity, which is increasing. Interest rate cuts are likely later this year and early next year, 2025. This means it's going to be cheaper to borrow money in the United States. And it means more people will borrow, again, creating more liquidity, which people will then invest. This creation of more debt-based money will continue or even possibly accelerate the devaluing of the dollar, of the USD. Both of those things are bad for working people in general, but they also happen to be good for the crypto industry. And I guess the idea is that hopefully in this cycle, which is still playing out, more of us can show others how Bitcoin and other quality crypto projects can get them to opt out of this cycle of devaluation and inflation. The hope is always that more people will be exposed, more people will have a better chance to get ahead, and subsequently be better prepared to plan for their future.